Right now, while you're watching this, something is happening in the global economy shift that could quietly reshape how money works for the next 10 to 20 years, and almost nobody is paying attention to it. Imagine waking up one day and realizing that the value of your money is slowly eroding, not because of something obvious, but because of a chain reaction happening across oil prices rising, global debt crisis, and geopolitical tensions. Oil prices are rising, major trade routes are under pressure, and powerful countries are making decisions that could trigger massive financial market volatility. And here's the scary part. By the time most people realize what's going on, it's already too late to react. This isn't fear, it's economic trend analysis. Because every major financial system change in history started quietly, just like this, before turning into something much bigger. The question is, are we at the beginning of the next big economic shift right now? Welcome back to the Dollar Pilot, where we break down real money strategies USA and financial trends USA that actually matter in the United States. Today, we're diving deep into a powerful idea. Not just what's happening in the global economy, but what it could mean for the future of wealth building USA and financial future planning. Over the past few weeks, global markets have been reacting to rising global economic uncertainty, especially after recent statements from the President of the United States that hinted at escalating conflict rather than resolution. Investors were hoping for stability, but instead, what we saw was the opposite: stock market futures dropping, oil prices surging, and cryptocurrencies like Bitcoin price movement pulling back. At the center of all this is one of the most critical trade routes in the world, the Strait of Hormuz, which is responsible for transporting roughly 20% of the world's oil supply. And if this choke point remains disrupted, even for a few weeks, the ripple effects could push the global economy into a serious economic crisis warning. Now, here's where things get really interesting. Historically, every major crisis, whether it was the 2008 financial crisis or the COVID-19 economic impact, has led to massive shifts in how the financial system operates. These moments of chaos often create opportunities for governments and institutions to restructure and centralize power. So, the real question is, are we heading into another one of those moments right now? Let's start with a concept that sounds complex, but is actually very important: the Net International Investment Position, NIIP. In simple terms, this measures how much of U.S. assets are owned by foreigners versus how much foreign assets Americans own. This is known as the U.S. foreign assets balance. And right now, that number is deeply negative, meaning foreign countries own a massive amount of U.S. financial assets. We're talking about trillions of dollars in U.S. stock market investments, U.S. real estate market, and U.S. Treasury bonds held by countries like China, Japan, and European nations. That might not sound like a big deal at first. But here's the problem. When those countries need cash, especially in times of crisis, they may start selling those assets. And when that happens at scale, it puts pressure on the U.S. financial system stability. Now, connect that with rising oil prices. Oil is priced in U.S. dollars, so when countries need to buy oil but don't have enough cash on hand, they sell U.S. assets to get dollars quickly. This is part of the global dollar demand. That's already happening right now. And as more assets are sold, U.S. Treasury yields rising becomes a major concern. Higher yields mean higher borrowing costs for the U.S. government, and with U.S. national debt approaching $40 trillion, this becomes a serious issue. At some point, if borrowing costs rise too much, the system can enter what economists call a debt spiral risk, where higher interest leads to more borrowing, which leads to even higher interest. It's a cycle that's very hard to escape. So what are the possible outcomes? There are essentially three paths the U.S. could take. Option one is to let the market run its course, allowing interest rates to rise naturally. This reflects interest rate impact on economy. But this could crash the stock market outlook, slow down the economy, and potentially trigger a US economic recession. Option 2 is for the Federal Reserve to step in and start printing money again, what we call quantitative easing, QE. This would stabilize the bond market, but could also lead to inflation risk USA, especially since oil prices are already rising. And option 3 would be to step back from global conflict and reduce tensions. But that could weaken the US global economic power and accelerate the world moving away from the dollar, known as de-dollarization trend. And here's the key insight: no matter which option is chosen, the result likely leads to higher inflation and a weaker US dollar over time. Now, let's talk about something even bigger, the next phase of the financial system. Because if there's one thing history shows us, it's that crises don't just destroy systems. They drive financial system transformation. And one emerging theory is that the next system could involve digital currency future and a new kind of financial infrastructure innovation. Imagine a world where major companies like Apple, Amazon, or Tesla offer their own digital wallet platforms. You deposit money into these platforms, and behind the scenes, that money is invested into US Treasury bonds investment. You get rewards, discounts, or even interest, while companies earn a margin, and the US government gets funding for its national debt system. Now, scale that globally, and suddenly, billions of people become indirect holders of US government debt through everyday apps they already use. This idea isn't just theoretical. It's already happening in early forms through stablecoin technology and digital finance systems that tie money directly to government-backed assets. While this could solve major economic problems, it also raises serious concerns about financial privacy risks and money control systems. Because in a fully digital financial system, access to money could be monitored, restricted, or even turned off under certain conditions. This is part of a growing digital financial control system. That's why understanding these trends is so important. Because whether this future becomes reality or not, the direction is clear. The future of money is evolving. So what can you do about it? So, first, investment diversification strategy becomes critical. Don't rely on a single asset or market. Second, consider holding some real assets investment, things like gold or other commodities that historically provide inflation protection assets. And third, stay informed through Financial Education USA, because in a rapidly changing world, knowledge isn't just power, it's protection. At the end of the day, we're not saying a collapse is happening tomorrow. What we are seeing is a shift, a gradual change in how global economy trends, money, power, and markets interact. And the people who understand these changes early are the ones who can adapt, protect their wealth, and even find new wealth-building opportunities. So if you're serious about your financial future, don't ignore what's happening around you. Stay curious, stay prepared, and keep learning. And if you want more real, Practical Money Strategies USA, make sure to follow the Dollar Pilot, because the world is changing and you deserve to stay one step ahead.